Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had 2 directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis.
Hey guys, it's James with the Chart Guys. It's Thursday, March 9th. I'm going to do my nightly oil video. So obviously we had a big dump day yesterday in oil, which has caused this big red candle on the weekly on increasing bear volume. I do have this long-term uptrend line on the weekly, which is currently holding for oil, with the daily RSI being a bit oversold. And I have this trend line at the top here, this resistance line at the top. And what this is forming is a rising wedge where the price, while oil is moving up, is contracting. So the range is getting tighter as the price of oil is moving up. And rising wedges usually come at the bottom of a longer term downtrend. And you can see we've been in an absolute downtrend longer term in oil. And what this is generally a bearish pattern. And what would confirm the break of this bearish pattern would be the break of this trend line here, obviously next week. And ideally what you want to see is increasing bear volume. So bear volume above this week's bear volume would confirm that this is indeed a rising wedge on the weekly charts. So something to keep in mind here. If we do lose this uptrend line here longer term, we do have another uptrend line here. And this level here at where it'll test this trend line, if we lose this line, is at the 45 area. Something to be watchful for is see if it bounces there. And we'll still keep the pattern of higher lows intact. And let me move this line away. And if this scenario plays out on the weekly, it looks like more of a channel where we have touches at the top and we'll have 3 touches at the bottom here. And we can continue to play the channel until there's a break of this channel one way or the other, which there hasn't been yet. So something to keep in mind long term while you're trading oil. On the daily chart, you can see that we are bouncing off the 200 MA on the daily. Bulls are trying to hold that level, but they still have a lot of work to do. And right now, all it is this RSI is oversold a bit, and oil is bouncing off of it. You can see the last time we had some oversold, we did have nice bounces. But what needs to happen to confirm this oversold bounce being more than an oversold bounce and being a reversal on the daily is tomorrow. Watch for a break, a green day, and a break above the high of today. The high of today was 50.84, so that could indicate that that weekly uptrend line that I drew on the rising wedge is still intact, and you could go for another test of the line at top here on the weekly. On the hourly, for the intraday players who want to look for something intraday, move this drawing. So the hourly is getting an oversold bounce here. You can see all it's doing still so far is it's cooling down the RSI oversold and continuing to dump. Now, what to look for on a trend change tomorrow as this oil chart develops overnight is, first of all, what we want to see is a bull cross on the hourly, TCG bull cross. Again, bull crosses are when the 4 EMA, my green line, crosses above the 8 EMA and the price above it. And what you want to see is that it get above this hourly 20 EMA, which could indicate that there's more bounce left in oil. The next step is to get above the high of this 50.15. So watch for that tomorrow early on in the hourly, or see if it happens overnight. If it breaks 50.15, then we're breaking this downtrend pattern of lower highs and lower lows. A red flag tomorrow would be if you were to see oil lose this low of 48.59. That would mean that there's potentially more downside. You're going to get a TCG bear cross on the hourly with the daily and the weekly moving against you. and in the direction of bears, and the hourly is going to be in the direction of bears, and the play to look for is for more downside. So again, as of now, this is just an oversold bounce. First step to watch is overnight, depending on how it develops, is gain the 20 MA here, and then break the high and set a higher high on the hourly. If we do pull back after we set a higher high, what we need to do is, on any pullbacks, you have to maintain a higher low than the low of 48.59. So those are things to watch for tomorrow as you trade oil. And any time on any bounce play, it loses the 20 MA, and then you get a TCG bear cross on the hour. That's also a red flag to exit the trade if you're looking for a bounce and to go back in the direction of the bears for further downside. So have a good night, and I will see you guys tomorrow.